Right, so what do I look for first before I enter any trade? And I think before I explain further, let me just deal with certain common laws that we know in life. I mean, Newton law of motion states that, I think the third law states that anything that goes up surely comes down. Anything that goes up surely comes down. Surely comes down. Anything that goes up comes down. Anything that goes up comes down. Goes up, comes down. Anything that goes up comes down here. Let me give you another example. Anything that goes up here comes down. Goes up, comes down. Anything that goes up over here also comes down. Up over here comes down. So it's like, once I embrace this law, trading now becomes, how do I determine whether we are going up, or how do I determine whether we are going down? That is the whole purpose. You are trying to determine the direction, whether up or down, whether down, so whether up or down. You understand? So most people who really don't have any reference data or any scripts that they understand very well, they can't really tell us whether we are going up or we are coming down. They will probably do the inverse. They will buy when they are supposed to sell, and they are going to sell when they are supposed to buy. That is, let's say if you are an investor, or yeah, of course, an investor. It depends on the kind of investor you are, long term or short term. I'm not really going into the details of you being an investor, but I'm just trying to say, if every movement that you make in crypto is not backed by a level of data, then you're like guessing, and it's hard to guess in the market, which is very manipulated. So what do I do if I'm trying to enter a trade? Since I know the law says anything that goes up goes down, anything that goes up comes down, sorry. So how do I plot myself to ride the trend, whether an uptrend or downtrend? Because as a trader, I'm trading trends. I'm trading uptrend and downtrends. You understand? So how do I determine? This is whereby you also inculcate your script that you're using to trade as a reference, because everything that you're doing should be backed by some levels of data. Otherwise, it's just a guesswork, and you can't guess with money. You have to have insight. That's why they say 90% of traders are losing the 10% of insiders, because the insiders have hands on the market. They not necessarily hands. They know the direction, and they know what's happening in the market. Others don't know. So in order to know, you need a script. So the script of reference that I can recommend is Market Cipher, because Market Cipher gives me two things, which is money, which is very interesting because you need to know where the money is. If there is no money in assets, price falls down. If there is money in asset, price goes up. So how do I plot my way out if I want to trade? Let me illustrate two things here. We have momentum and we have money, and let me show you how momentum works. Let's go to this side. This is our Market Cipher B. The downstairs here is Market Cipher B, and let me show you how it works. We have a zero line here. This is a zero line that divides the regions of positive territories and the regions of the negative territories. You understand? So this is a yellow line here. Then we have an oscillator that moves. It moves in accordance with time. You understand? Let me move this right, and let me. Our oscillator moves in accordance with time. So let's say if I'm 1 minute, it moves every 1 minute, 1 minute, 1 minute, 1 minute, 1 minute. The movement is showing you direction. Remember, movement is a proof of life. So the movement I'm making is showing you direction. It's showing you direction. So if I'm moving like this, this is a direction. If I'm moving like this is also a direction. If I'm moving like this is also a direction. If I'm moving like this is also a direction. Makes sense? So every movement of the oscillator goes with time. And I'm not really going to talk about time in this video. I'm just dealing with what I look for in trading. But I just have to explain the oscillator. So since my oscillators are moving in accordance with time, every movement is for a very given period of time. So every movement I make is for a very given period of time. Every movement, time. So it's like, if it goes like this, then it's a movement. If it goes like this, also it's a movement. It goes like this, it's a movement. Let me move the drawing in. Let me start over again. So how do I plot myself if I want to enter a trade? This is the zero line, this is the positive, and this is the negative. So if my money is moving like this, is moving like this, it means there is money in the asset. What if my money comes down and goes up? It's like money spiked up. You understand? Goes down, let's say like this, then comes down like this, also goes up like this. It's like money is lingering in the positive. It's like it's in the positive territory. It goes up, comes down, goes up. So it's like I have money in the asset. So let's say if my price was here, it will probably be going up because there is money in the asset. There is money in the asset. What if my oscillator comes down like this? It means my money is leaving the asset. So money is leaving the asset. Money is leaving the asset. You understand? That's a typical market cycle for you. So how would I plot myself if I wanted to trade? If I wanted to trade, I'll probably first of all look at where the direction of money is heading. If money was here, I know the money is in the asset and money is going upwards. It's going upwards. So price is obviously going upwards. So this is the best time to, let's say, long on the side, on a higher time frame, going up, going up, going up, going up. And let's say my momentum is also, and let me also illustrate how momentum works. Momentum functions like this. Momentum has a functions with another line called the overbought territories and the oversold territories. So this is how momentum works. Momentum starts like this, goes up, crosses this line, and comes down. Momentum always crosses this line because that's how momentum works. It works with your mostly the overbought price. This is the overbought region, and this is the oversold regions as well. So this is how momentum will work. It will cross this line, then comes down. So in other words, if you find momentum going up like this, you understand, and money also going up like this, or money in the positive going up, this is the best time to long. So you see momentum coming down like this, then it means price is probably coming down because momentum is an influential oscillator. Price is also coming down. So if you were probably in a trade like this, you could probably short small because momentum is also coming down. Momentum also has influence on the very direction of price, so momentum is coming down as well. You understand? So you see momentum, let's say, cross the zero line, sorry, yeah, negative 60 line, and it starts initiating towards the positive territories. You understand? So you see it, let's say if momentum crosses 60 line, negative 60 line, it means momentum is going back upwards. But it also depends the very direction of money flow. If money is also in the negative here, money is in the negative here, it means momentum might struggle to go up completely. It might struggle like this, come down, small struggle before it goes up. Let's say I see my money flow also entering here, it means money is entering back into the positive territory, so price is going up. So this is the best time to also long. Do this inverse relationship and you realize the market cipher is very easy to understand. Let me give you a typical example. Like money is in the assets here, in the asset, it's going up, 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 it's going up. The money is coming down, so it's leaving the assets. So let's see how price reacts to it. It's like money was going up here and momentum was also surging up here. So what happened to price? It went up. Anything that goes up has to come down. Anything that goes down surely goes up. That's the whole purpose of market cipher. It gives you that illustration. So money was exiting the assets, money was leaving the asset over here, and let's see what happened to momentum. Momentum was also coming down over here. You understand? So let's see what happened to price. Price also fell. So trade these trends, the uptrend, downtrend, consolidate. Trade these trends, uptrend, downtrend. The hardest part is this part, sorry, consolidation. It's hard to trade within these regions because it's hard. That's the whole purpose, because price doesn't really move upwards definitively or downwards. It just, it just learned during like this. This is hard to decide. So it's like it's hard to trade within these regions. But I don't lie, most people, most people are very good in trading in consolidation. I don't recommend it because it's hard for me, and I keep it simple. So this is just what I basically look for. Looking at the very direction of money and momentum, and I trade in accordance with the very direction. So until then, basically, this is just a simple overview and of market cipher, different strategies, what to look for, and yep. Until then, have a nice time, people.